right, let's look at the business news. And of course, this is leading. The price of petrol shooting up at midnight tonight. It will reach an all-time high. The price at the pumps to go up between 94 cents and R1 per litre. Now, unleaded 95 petrol that is transported inland is the most expensive. That will reach R17.32 per litre. The last time it was above R17 was in October 2018, 2.5 years ago, and it has never been this high. The weaker rand makes imported oil for fuel more expensive, and the R1 increase also includes an increase for levies for the Road Accident Fund. That was announced by the Finance Minister earlier. To discuss what this means, we're joined by the Chief Economist at Alexander Forbes, Isaiah Mhlanga. Mr. Mhlanga, thank you for being with us. So take us through the confluence of factors that leads to a record high petrol price.
There are three major drivers of the fuel price, two of which are backward-looking and one is forward-looking and permanent. The backward-looking factors are the oil price, which over the period under consideration increased by some 5% from $61 per barrel to about $64 per barrel. And that is compounded by the exchange rate, which means the rand to the US dollar, which over the period as well depreciated from 14.76 to 14.95 per US dollar, which means the rand price of oil increased. And the other factor, which is forward-looking, is the fuel levy and the road accident funds, which increased by 16 cents and 11 cents per litre respectively, which from the 7th of April, which means from midnight tonight going forward. And that is more permanent because these are taxes and levies that are levied by government in order to generate more tax revenues. And that is going to weigh quite heavily on most consumers in the country.
Well, explain this for us, because motorists earlier were saying the government shouldn't do this, but that government portion, the levy portion, how big is it compared to what you're talking about, the main factors, which is the rand and the oil price?
Look, historically, over 55% of the oil price are really taxes that are imposed by government. If you look at the price of petrol in South Africa relative to the price of petrol in Botswana, for instance, it's quite different. And in Botswana, it's much lower compared to what it is here, simply because they have lower fuel levies and road accident levies in that particular country. So taxes really account for quite a significant chunk of the fuel price, which is what government requires in terms of taxes, given that the fiscus is quite constrained, but to maintain the roads also requires funding, hence the imposition of these fuel levies.
So in your opinion, are those taxes fair for South Africans? This is going to hit people very hard in the pockets. The cost of living is high, and for the poor, they spend a huge portion of their income on transport.
I think the question of fairness is a little bit outside of my space, given that it's a morality question, but purely from an economic perspective, every service that is provided to citizens needs to be paid for, and ordinarily it is paid by levying taxes from those that can earn and actually pay for them and pay for those services. Yeah. But of course, given the levels of inequality in the country, given the impact of COVID that has impacted the lower income households, we could say it's unfair because the cost of transport, whether public or private, is going to rise, while if we look on the other hand, wages and salaries are unlikely to increase by much, which means the quality of life is going to deteriorate as people don't afford to pay for increased costs across the board.
And transport, like we were saying, a big cost for the poor, so taxes could go up. Are you concerned about the knock-on effects across the economy?
Of course, transport costs, they do filter to many other prices of goods and services, because almost everything we transport by roads, which means for goods to reach our harbors and be transported into inlet, that will cost more, and ordinarily companies just pass on those costs to the end consumer. But given how depressed incomes are and how depressed the economy is with the levels of unemployment, it is quite difficult for companies to pass on the full extent of the increases in cost. They will absorb some of the costs, which is something that we have seen historically. But nonetheless, there will be an increase in the cost of living for most South Africans.
And how does this fit in with power price increases, with the general cost of living that South Africans are facing right now?
Well, if we look at the CPI inflation, which is the Consumer Price Index, as a measure of the cost of living, and admittedly, it doesn't measure an individual cost of living. So for some individuals, it's higher than the CPI, while for some, it's slightly lower, depending on the basket of goods which they consume. But at a national level, inflation has been rising. But if we look at the latest print, which is 2.9%, it has risen by much lower than the lower target of the Reserve Bank of 3%. But going forward, projections from the Reserve Bank are that it's going to increase to about 4.5% over the next 3 years. But if you look in other countries, they have much higher inflation expectations than we have. Nonetheless, if we also consider wage increase, they're unlikely to be as aggressive, given that companies are still expected to shed jobs. So it's quite difficult to negotiate for higher wages when companies are signaling that the cost of doing business is increasing, and the first culprit which they look up to is to reduce the number of jobs which they employ. And as a result, wage settlements are likely to end up much lower than what we would expect, which just means on the income side, we're not seeing an increase, but on the cost side, we're seeing a significant increase across most of goods and services, which is going to exert a burden on consumers.
We always talk about the interest rates being very low. That is the one thing that the Reserve Bank has done. And it puts money in people's pockets. If they're paying off credit, they can pay off less. But I guess that's for the middle class, for the people who can afford in the first place to buy houses and cars on credit.
Now, of course, for those that have debt, whether be it mortgage bonds or it's a vehicle financing or even unsecured loans, the decline in interest rates that we saw from last year of 300 basis points did help, especially if you consider that most of those loans, they have floating interest rate, which means they are linked to the repo rate. Every time the repo rate declines, they also decline in terms of the level of interest rate they pay. So they would have seen some decline in the cost of servicing that debt. But we have seen the bottom in interest rates. We are not expecting any further cuts going forward. But also on the upside, we only expect the Reserve Bank to start hiking rate in the second half of next year, which means for those consumers that are not able to reduce those debt repayments quite aggressively, which is the majority of lower income households, they will see their interest costs starting to increase once the Reserve Bank starts increasing interest going forward. But we don't expect that to be something that happens over the next 12 months or so.
All right, so toward the end of next year. Thank you so much for a full explanation. And I guess in summary, for many South Africans, this petrol price hike that is coming in at midnight is a serious one. That was the Chief Economist at Alexander Forbes, Isaiah Mhlanga.